Hello and welcome. The local currency has crossed the 7 cedi to $1 mark on the retail market within less than 2 months into this year. Joy business checks at some forex bureau and commercial banks indicate that a dollar is being sold at a little above 7 cedis and 5 pesos, while some forex bureaus and banks are buying a dollar between 6 cedis 85 pesos and 7 cedis. They are selling $1 for 7 cedis as well as 7 cedis 5 pesos. Now, the city's predicament has been largely attributed to the uncertainty surrounding Ghana's fiscal outlook, despite interventions by the Bank of Ghana. The lack of confidence in the Ghanaian economy by some investors has also fueled selling of some of the country's international bonds, whilst demand for the dollar for imports keeps rising. The city's depreciation affects all value chains of doing business in Ghana, with traders at the receiving end of this free fall. Dr. Joseph Obin is president of GUTA and he joins us via Zoom. Doc, we're grateful that you could join us on this program. What are things looking like for traders amid the city's depreciation?
We are losing our capital. What it means is that early December, if your capital is $100,000, you have to fund 640,000 Ghana cedis to buy $100,000. Now that the dollar is 7 cedis, is trading for 7 cedis, it means that you have to go and find a top-up of 60,000 Ghana cedis. So if you are not able to get the top-up, it means that you have to content yourself with $91,500. It means a loss of capital of about $8,500. This is all that it means. Means that you haven't done anything, you haven't gone anywhere, but your capital have been spirited away with about $8,500. This is the simple calculation of what the depreciation do to us.
Indeed. And should the trend continue, Doc, how will prices be on the market?
Yeah, this is a very fundamental issue for pricing. And so you cannot do away with the dollar as a component of pricing. And so it's a natural sequence that if the dollar goes up, then of course the prices in the market will also follow suit by way of going up. That's because we use the dollar to buy goods offshore, and even there, because of the COVID, prices of goods and services have already gone up. Freight charges have also gone up, and then when you come here, you are paying duty. We also benchmark our duty with the dollar. So if the dollar goes up, it means that it throws everything out of proportion. And definitely, it's not something that somebody is going to tell, or a group like GUTA is going to tell its members that go and increase your price. No, there is something that is subjective. But then, when you are doing your calculation, the dollar will definitely affect it. So it might influence prices.
Indeed. Please hold on for us, Doc, because we shall be coming to how we could, resolve this situation from the trader's perspective. But let's also bring in economist Courage Boti, who is with Data Bank. Courage, the question now is it a free fall or a marginal depreciation? Well, we're trying to get Courage on the line, but Dr. Joseph Obin, you've been in the market for quite a while, for decades now. Where lies the solution to this perennial challenge?
Yeah, I like the word that you use. This has become very perennial. And why is it perennial? Have you drawn the maps to suggest what is the push factor that the dollar increases around this time? Normally from December, January, and then mid-February. This thing happens all the time. And it's because something is happening. You understand? What is happening? The juiciest part of the economy is being owned by foreigners. So our investment policy should be looked at critically. Because at this time, most of these telecommunication giants, most of these extractive industries, the oil, the bauxite, the gold, and all that, they are all running up their activities for the year and transfer their profit, and they have 100% of repatriation of their profit, which is legitimate. But then, what are we doing to sustain or to retain some of this repatriation? That's the pain. That's what we have to think about. Are we going to do a conscious effort that in these areas, the juicy part of these businesses in this economy, government should have a conscious effort of investment? If about 30%, then of course we'll be able to retain same percentage here.
All right.
But if we do not say by way of making a policy that will ensure that we have investment in these areas, then of course they will repatriate. Don't forget that we've been recording balance of trade surplus since 2019 to date. If that is so, then the export is not doing badly. And even though I admit that we have to do more to encourage a lot more export. But if there's a balance of trade surplus, then we are still suffering this. Then there are other areas that is causing this problem. Is it the service sector that is causing this problem? We have to open our eyes and look at the service industry. That maybe the capital flight and all that is coming from that angle. These are areas that we have to look, we scrutinize and look.
All right, let me bring in Courage Boti with Data Bank. Courage, you are the economist, you work with the numbers. Dr. Obin, please hold on your thoughts there for us. We shall come back to you shortly on various solutions once again. But of course, Courage Boti joins us from Data Bank. Courage, you are an economist, you work with the numbers. Is it a free fall or a marginal depreciation?
Well, it's actually faster than usual. To talk about more than 6% depreciation in less than 2 months is not a mild depreciation. But the driving causes suggest that, or the drivers of this kind of depreciation suggest that it could be a temporal situation that could correct over time. I think sentiments are not right. The development of the market do not help. Especially around revenue assumptions and, of course, the impasse around e-levy and all of the issues around it. And the downgrades from Fitch and Moody's also didn't help. So sentiment will remain negative. And it's not even here on Ghana alone. I think it's reflective on the urban market for Ghana bonds. But ultimately, the onus is on government now to prove to the markets that we are prepared to undertake fiscal consolidation. And I think they've taken a good step in that direction. Besides the revenue growth that they anticipate, should they succeed in passing e-levy and then roll out the exemption bill and all of its amendments, they have added an expenditure control leg to the fiscal consolidation agenda with a 20% cut in expenditure. Unfortunately, that came as a reaction to the downgrade from the rating agencies. But if we're able to implement that through the first half of the year to show that the deficit and then the primary balances are on target by half.
I'm afraid we've lost Courage Boti there, but of course, take a listen to economist Dr. Owusu Sarkodie, who somewhat shares the thoughts of both Dr. Obin and Courage Boti. He's calling for structural change of the economy if the country is to curb the perennial fall of the value of the CEDI. According to him, the government must stimulate exports and cut down on imports to enable the central bank to have enough foreign exchange to meet dollar demands.
And currently, the fact that government has not been able to raise bonds from the Eurobond market or the international capital market, and the fact that foreign investors are selling government bonds are also making government's inability to meet the demands of forests. So you have demand going up, yet at the same time supply of forests is going down. That is why the city is depreciating so fast. Within these few days, we are just about 45 to 50 days into the year, and the city is depreciating so fast. And this is the reason. So when you have a cedi depreciation like that, it affects inflation. Because most of the goods, like I said, are imported. So when they import at a higher price, obviously they will increase the price here. That causes inflation. Look at the fuel prices. You know, the export price is calculated by also taking into account the cedi depreciation. And already the international crude prices are going up. So when you compound it with the cedi depreciation, then the fuel price will go up. With the fuel price increases, transportation fares will go up. We have heard of 30% increment in transport fares. Then the consequence of this is inflation and then high cost of living. And you know, Bank of Ghana will obviously also want to
Tackle there, Courage Boutique. Just before we lost you there, you're talking about some of the external, forces that are driving the cedi downwards. But it also begs the question about what monetary stimulus, if any, must be injected to restore the cedi's performance.
Well, we operate a flexible exchange rate regime. Well, if you like, dirty float, which means that Bank of Ghana's role in the FX market is actually just to even out volatility. So normally the market should operate freely and then the demand supply should determine rates. The interventions I see is what the Bank of Ghana is doing, but it's limited by the level of reserves. They have, I think, up the level of bi-weekly FS auction to about 75 million every 2 weeks. And the intention is to guide or provide a forward guidance to the market. They are also available on a daily basis, to even out volatility should intraday demand levels surge. And that is all they can do. But we have a limitation, an important one at that, 9.9 billion of reserves. We do not expect Eurobond issuance this year. Cocoa loans, if they come in at all, will be somewhere in October this year. And then, of course, yes, there are talks of bilateral loans and all of that, but there hasn't been any success with that yet. And so we do not expect any significant boost to the reserve beyond the trade flows that are coming in. Now, you do not want to deplete your reserve to the level where you are externally vulnerable. What that means is that if there are shocks that demand that of FX obligations, sizable ones, that you need to meet, then you are handicapped. You may not be able to do that. So that will limit how much they can deplete that reserve, $9.9 billion, to support the cedi at the moment. And so, yes, at best, I think Bank of Ghana is doing what is possible within the resource limitations on them. And then we might have to hope that government demonstrate by half year that we are able to meet our fiscal target. If we do that, that would win back confidence and we can begin to see some portfolio inflows again into local issuances, and gradually access will open up to the external market for us, which might pave way for the cedi to have some breather.
And we're looking forward to see how that pans out. Courage Boutique, economist with Data Bank. We're grateful that you could join us. We're also grateful to Dr. Joseph Obeng, President of the Ghana Union of Traders Association.